Hello everyone and welcome to our channel. This is the first video in the series about financial accounting. This video is going to be very short and we're only going to get a brief idea of what accounting is and what it's used for. Okay, so as you may know, all businesses are involved in three types of activities: financing, investing, and operating. Accounting keeps track of the results of each of these business activities. Financial accounting is a specialized branch of accounting that keeps track of the company's financial transactions. The transactions are recorded, summarized, and presented in a financial report or financial statement, such as an income statement or a balance sheet, which are going to be discussed in detail later on in our next videos. For now, it's enough for us to understand that these are just documents containing some financial information about the company, showing its assets, net income, operational costs, and many more. So why all of this stuff is done in the first place? Why bother collecting that information, you might ask? Well, these so-called financial reports and statements record the company's operating performance over a specified time period. Companies generally show their financial performance and position to people outside the company, including investors, creditors, suppliers, and customers, in order to get cash inflows and investments from them. Okay, now we know what accounting is and why it's for, we might want to look at what it's made of. Accounting consists of three basic activities. It identifies, records, and communicates the economic events of an organization to interested users. In order to clearly understand each of the basic activities, it's better for us to go along with an example. So let's suppose you are a mechanic and own a car repair garage. As a starting point, as we already mentioned, you should identify the economic events relevant to your business. In this case, this might be the sale of car parts, or maybe the repair of certain motor vehicles. The next step is to record or keep track of those events measured in monetary units in order to provide a history of your financial activities and to have a detailed information about your company's performance. For example, let's say during the month of April, you've sold various car parts amounting to $100 and also repaired 3 cars, which brought you $300 of cash. How would you record those events? Well, you'd summarize all the sales under sales revenue category, write the respective amount of $100. Next, you'd summarize the income received from repair under repair revenue category, for example, and write $300 next to it. Now you know for sure how your company did in the month of April, and it's for you to decide if it done well or not so well. By the way, that's the simple example, and it's not necessarily the comprehensive way of doing things in terms of accounting, but I did it just to give you an idea of the recording process, okay? Great. Finally, you'll communicate the collected information to interested users by means of accounting reports. The people who want to have a look at your financial position might easily do so by examining the financial reports you prepared. Based on these reports, they might think that you are doing a great job and might consider investing into your business, which will help you to expand. Or they might think otherwise and hesitate to be a part of your business because of your inadequate performance. One important thing to know here is that a vital element in communicating economic events is the accountant's ability to analyze and interpret the reported information. Analysis involves the use of ratios, percentages, graphs, and charts to highlight significant financial trends and relationships. For example, the accountant might analyze the financial statements and identify that your sales revenues have gone up considerably over the course of last 3 months. This might be used as a positive indication of your company's improving performance. Interpretation, on the other hand, involves explaining the uses, meaning, and limitations of the reported data. Like, for example, an accountant might explain a potential investor that struggles with understanding the reports you've prepared all the relevant information about the performance of your business that the customer is interested in, whether these are increasing revenues and income or various costs incurred. This will help the user to form an opinion about the company and make decisions about investing, giving credit, or using the company's services. Okay, great. We already know what accounting is and what it consists of. One question we might want to answer is, who uses the accounting data we provide? Well, there are two broad groups of users of financial information: internal users and external users. Internal users of accounting information are managers who plan, organize, and run the business. These include marketing managers, production supervisors, finance directors, and company officers. In running a business, internal users must answer many important questions. The examples of such questions might be: is cash sufficient to pay dividends to shareholders? What price for a cell phone will maximize the company's net income? Or can we afford to give employees pay raises this year? External users, on the other hand, are individuals and organizations outside the company who want financial information about it. The two most common types of external users are investors and creditors. Investors use accounting information to make decisions to buy, hold, or sell ownership of shares of a company. Creditors, such as suppliers and bankers, use accounting information to evaluate the risks of granting credit or lending money to the company. External users make decisions based on the answers to the questions like, is the company will invest into earning a satisfactory income, and will it be able to pay its debts as they come due? As you can see, accounting plays a big role in the economy and the business world, and if you work in the financial industry, it helps a lot if you know accounting. Well, I guess that's all for this video. I think we've made a solid introduction to the course. In the next video, we'll talk about the measurement standards and principles in accounting, which might surprise some of you. For now, thanks for watching and see you in the next one.